You did not, and you will not be giving your money to me so we can invest that in the stock market. My friends, that is not how this works. So when somebody is trying to compare it to an investment, it is not an investment. It has guarantees, liquidity, control, and uninterrupted compound interest. Where are you going to get that? Hello, 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 and welcome back to the podcast. Thank you very much for being here. All right, you guys, excuse the look, but I am heading out for a little vacation. Yes, I'm going to vacation in Nebraska City, Nebraska. By the time you hear this, I'll be back, but we're going to the Lead Lodge. If you guys live in Nebraska or around Nebraska, I am driving 9 hours just to go stay at the Lead Lodge because it is serenity. It is quiet. It is just going to be awesome. And then I'm going to go to the botanical gardens in Lincoln because, little secret, I love botanical gardens. And so I go to them wherever I am if there are some to go to. So if you guys are also weird like me and you like to go see that stuff and there are amazing ones, well, let me know. All right. So moral of the story, I'm heading out for vacation. Didn't do myself up. So today let's talk about the fact that this is not an investment. And this probably will not get to the people that it needs to get to, but it can be shared. And so if you have somebody that is acting like, oh, hey, this is an investment, maybe you want to share this with them. So it's inevitable. I get at least one question a year from an existing client that says, hey, Mary Jo, how come I am not getting an annual statement from the insurance company that shows my rates of return? How come I'm not getting a monthly statement from my insurance company that shows what my stuff is invested in? How is it doing? All the good stuff that you would get if you were investing in a stock. And the reason why is because this is not an investment. It is a life insurance policy. I am not sure where we go wrong with thinking that this is an investment versus life insurance. Everybody has to read the book. The problem becomes, as Nelson talks about, use it or lose it. He does not mean use your money or you lose your money. He means you either use your knowledge and you keep using it and you surround yourself with people that are doing that, or you lose the understanding of why you're doing this. And this is just so evident every single time one of these people asks this question. Because what's happened, most likely, is that some financial advisor is out here creating a whole bunch of noise, right? Noise, noise, noise. What's your rate of return? How's it doing? Blah, 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 blah. And all of a sudden, we start questioning what we have done, what we have put money into. And instead of calling, instead of revisiting the podcast, instead of revisiting the book, what do? We just immediately panic and go, oh my God, what is the rate of return in that thing? How come I'm not earning anything? Because it's not about a rate of return. I should have worn my t-shirt. My friend Teresa, she's an agent that works with me. She got me a shirt that says, it's not about a rate of return. It's a formula. And you guys, I talk about that in our first meeting. I talk about the fact that this is a formula. This is not a rate of return. If somebody is giving you some sort of rate of return, it's a gross rate. They've taken the formula apart. Years ago, when I started this, yes, I actually did tell people, oh, this is going to be about your rate of return. Did I lie? Nope, because I was looking at a net rate of return. However, I don't do that anymore because everybody's is going to be very, very different. And guess what? I've learned some stuff along the way. I'm not going to mislead people and tell them, oh, this is your rate of return. If you are in the early years of your policy, guess what? You are going to end up going negative because you've probably paid premium. Let's say you pay a premium of $20,000. And you only have access to 15. That's not positive, right? That's not positive when we look at the cash value. Now, what if we figure in death benefit? Oh, then we're positive. But we have to look at all the aspects of the policy and what it has to offer. This is not an investment. This is about liquidity, control, guarantees, uninterrupted compound interest. It is that simple. So if we are borrowing cash value to use it, should I ask you can you please send me a statement at the end of the year to show me what your rate of return was for what you used it on? Most of us want a rate of return. We want to see some sort of paperwork that says this is how much the policy earned. But are you looking at your farm finances like that? What's your rate of return on your farm finances? What's your profit margin over there? Do you know those books? There is just this noise out there that says you need to have this monthly statement. The insurance company does not take your money and put it into your account at the life insurance company and then invest it in the market. That is not how this happens. This is not universal life, variable life, or index. You guys already heard me screaming about that last week on the podcast. I think that was on the Without the Bank podcast. If you haven't heard it, go over there. But this is not money in the market. Your life insurance companies that are mutual, paying dividends, are taking your premium and they're investing that in bonds and real estate, and it's a big pool of money. And that pool of money has been managed for 120, 30, 40, 50, 200 years. Depends on the company. And guess what? They've paid claims every year. They've paid dividends every year. Cash value goes up every year because by contract, you have a guaranteed interest rate that has to be paid. That is a gross rate and it's a formula. You have a guaranteed interest rate that has to be paid and it compounds uninterrupted. Uninterrupted. So if you want something as proof that what's happening in my policy, you have the guaranteed column of your illustration, guaranteed by contract. That's going to show you exactly what's happening. That's projecting out till you're 121, right? Or whoever the insured is until 121. What's not guaranteed is the dividend. But you are going to get a statement at the end of the year that says this is how much you've been paid in a dividend. That dividend is then assumed and it goes over to the guaranteed side of your illustration. And so you can ask for an in-force illustration every single year after you pay the next year's premium. Don't ask for it before you've paid the next year's premium because the numbers aren't going to match up. So get that out of your head that this is some sort of an investment, that you are going to get this monthly statement. This is not an investment. We talk about it in the book. I scream at the top of my lungs that this is not about a rate of return. It is about liquidity, control, guarantees. You use it or you lose it, my friends. That is exactly what Nelson said. If you do not have Nelson's book, then I suggest you go get it, as I always do. If you have his book, then I suggest you reopen it and you read it again. Because it is crazy to me how all of this noise can get people starting to question what they're doing. It's great that you're questioning it. But if you were sitting in it, if you were making sure you were up to date with all the information, if you were talking to me, we wouldn't have these questions. If you've read the book and now you have people coming to you and saying, yeah, okay, so it's whole life. What's the rate of return on whole life? If you haven't set up the appointment, if you haven't listened to more information to understand that one side of this is guaranteed, then we have to re-educate. We have to get you more education. You have to go find more education. I can lead you to knowledge, but I cannot make you think. That is 100% up to you. Where else are you going to put money and have a guaranteed rate of return, guaranteed uninterrupted compound interest, by contract guaranteed? Where else do you do that? There isn't another tool. If there was, that would be fantastic because then we could use that tool. Some of you right now might be saying, well, Mary Jo, I can go do that in a CD. Oh, yes, you can, my friend. But who gets the dividend when the company makes money? Oh, that would be the shareholders of the bank, right? We want that dividend. That is why we are using dividend paying whole life with a mutual company. That is extremely important. Between Nelson and I, we're not just giving you information to read. That would be pointless. Nelson didn't have time to put unnecessary words on paper. Neither did I. Nor do I care to talk about unnecessary words. This is information that is needed constantly because I'm whispering. Those of us that are teaching the infinite banking concept are whispering. The investment world is screaming at you. It's everywhere. It's on TV. They're at football games. They're sponsoring your local whoever's and your basketball teams, your football teams, right? They're on every street corner. Where are IBC people? There's not hardly any of us compared to, there's hardly any of us. There's less than 1,000 of us that are authorized. In the United States, less than 1,000 of us are authorized practitioners of the concept. There are a lot more people out there saying they can teach it and they cannot, which is, again, what I was screaming about last week on my podcast again. So you are not going to hear a lot of this unless you get involved in the community. We have a Facebook group for our clients. If you're a client or if you're looking at being a client, we have a Facebook group so people can talk in there. I'm going to be honest, not super active, but you can talk because, farmers, you guys don't want to talk to anybody. So make sure that you are reading, rereading, calling, talking to people that understand the concept. I have a client that lives in Nebraska and they have him and a friend. They're not both my clients, but him and a friend both do infinite banking. They have different practitioners as agents and they're meeting and they're talking about it. I have clients that have met at our client summits and they email and text one another and they're talking because they've gotten to be friends and they're talking about how they're using it and how's it working and all that good stuff. It's absolutely fantastic. But you did not and you will not be giving your money to me so we can invest that in the stock market. My friends, that is not how this works. So when somebody is trying to compare it to an investment, it is not an investment. It has guarantees, liquidity, control, and uninterrupted compound interest. Where are you going to get that? Okay. All right, you guys. You have a fantastic rest of your week. You let me know if you need me. If you haven't gotten the books, go to farmingwithoutthebank.com, grab your books. Otherwise, I'm out for vacation. You have a fantastic rest of your week.
Thanks for listening to the Farming Without the Bank podcast. We hope today's episode has inspired you to take control of your finances in new ways. Don't forget to check out our website, farmingwithoutthebank.com, and engage with us on our Facebook page, Farming Without the Bank. Join us next week as we smash more financial myths and empower you to accomplish your financial goals.